Happy Friday. It's 8:03 a.m. Chicago time on Friday, the 18th of January, 2019. Thanks for joining me this morning again. It's Friday. So, bonjour à tous. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, a risk on as the market continues to discover above yesterday's range in the ES. We're seeing the DAX lead today with a whopping 239-point gain, or up 2%, followed by the Euro stocks up 58 points or 1.9%. Crude making a climb, up 1%, up 55 cents. And followed by the Dow. The Nasdaq is up 40. The S&P is up 14. The VIX has dropped some more this morning. The VIX futures and gold is off. Gold's trading at 1,283. Very wide chop zone in there, and so forth. So we can see allocation is to risk this morning, very clearly, and so we are set up to continue yesterday's burst thanks to Treasury Secretary Mnuchin and the announcement that was made by his department and then later refuted. But the market pushed pretty strong yesterday. I wasn't here for that, but it did. This morning, the only thing really to look forward to, the key thing to look forward to, is the Michigan inflation or Michigan sentiment prelim. This could be a mover. We have Fed's Williams releasing comments currently. Pay attention to that. If you're a convergent, make sure you turn on your Trade the News feed and listen in for anything to do with future expectations or his views on the adjustment of interest rates with the development of our economy. So at 9 o'clock Central, 10 Eastern, we get Michigan sentiment. Pay attention to it. It could be a mover. And then after that, we're pretty much done. We get the Baker Hughes rig count at 1 Eastern, which hasn't really moved us around that much. It's key to remember that Monday is Martin Luther King Day. It is a holiday here in the United States, and the market's open till noon Central, 1 Eastern in the futures. I believe same in the equities. I will not be here on Monday. I will not be doing a trader bite or anything. I will be focused on some other things, taking a day off, really a mental health day. So today's the last trader bite until Tuesday when we resume back on track as usual. Again, Monday is a holiday and it's a day off. Let's move on to our review segment. Now, the review segment, my primary scenarios were just way off yesterday. But there is no way for me to predict what the market's going to do. All I can do is play the probability, that the thing that's most likely to play out, and that's what I did. And so the primary scenario was looking for a push into 26.13.14. I expected it to tangle there and struggle, and then I expected it to pull back. So I was looking for responsive buying to pull back and push down, which clearly did not happen. The secondary scenario is chop that then brings us through the range of Tuesday, simply because Wednesday was a completely balanced day. There was a pretty poor price discovery and pretty good price acceptance on Wednesday, and we finished down after a pretty decent run up, and to me it looked like it was up against some pretty good resistance areas, namely 26.26, and it finished down, and it ended up selling off down to here. in the overnight session. So the normal behavior of a top is to have a neutral day down or neutral or a balanced day, chop day, and then we start below, test up, and then continue down. But here's what actually happened, and as you guessed, you know, uh, you got to take the trade that's in front of you, and the trade that was in front of me was the 26.13.14 short in the morning, which uh, which was a full stop. So let's go back to where we open. A lot of rotations on a two-tick Renko. Almost need to go to four. Here's where we are, where we were. We opened up. Remember the prior day, relative, very balanced profile. So the question becomes: do we push into the prior day's range, and and if we do, if we hold the prior day's range, then the primary target becomes the point of control. Anything that becomes the value high because balance, the value area is really important when we're in balance. And then beyond there, if it gets beyond value high, then we're looking for it to break 26.26, and then to start moving towards 26.40 and 26.45, which is the midpoint of the entire drop from the all-time high of about 29.50 to the December 24th low. I believe it was December 24th low. The mid of that is 26.45.50, and that just happened to be the top to the tick yesterday. They don't always work that way, but that's the case here. We turned right at the mid fib yesterday. So this is what it did. It tested the point of control right here, pulled back, looked pretty good for the potential for a rollover, and then it didn't. It actually held this 13-14 area, the stock zone right here, the gray area, and then from there it extended the range up. So off of shorts, longs, and look for 26 at some point in the session. And if we fast forward, we could see it took out 26, but it also pushed even higher on our friend Mnuchin's announcement right there. There's a news-based announcement, and then the market comes back to basically the scene of the crime. Down to 26.21 is where the scene of the crime is, and it got pretty close, but never actually took it out. Yesterday's profile, very serrated again, very choppy. Just no consensus at all yesterday. The market was pretty aggressive to the buy side. Pretty good rotations. The biggest rotations of the day were to the buy side, whether it's in price or in delta. This stuff just wasn't we couldn't buy enough of it. And participation was kind of interesting when we look at the relative delta. Um, when we look at the relative delta, as the news came out right in here, we could see that large lots start participating. Yellow's large lots. It's on a consolidated tape basis. This is very accurate. On a consolidated tape basis, we could see that the large lots, which is 100 lots or more in one tick per trade, the large lots were really getting into it here. The very large, while small lots were buying all day from the open, large lots opened with a buy and then were selling off until the news came out, and then they continued to point lower. Very large lots bought into the news and then became sellers and almost went flat on the session by the end of the day. Really interesting stuff. Not much, hard to use that, but it does give us color on our bias intraday. And that's basically the review of what happened yesterday. Now let's look at what we carried over into the overnight session. The overnight session remained sideways until 4:30 Central, and it started to push up into the European session quite a bit. Traded, it bounced quite a bit here, quite a bit traded there, higher volume, and we ended up shifting the point of control up, and now we're pushing higher. We've built a pretty good consolidation zone um, and support right against that 2645.50. You see that right there? Just bang, 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 bang. We see a ton of absorption on the volume scope in this area. Even for an overnight session, you could see that there was a fair amount of trading that took place where sellers banged away and banged away and banged away on that 47 and couldn't really get anywhere, couldn't hold price lower. And as soon as it broke, we had a false breakout. As soon as it broke and came back in, you can see large lots, big buying. Uh, Big buying came right in. Sorry, the chart shifted. Big buying came right in, and now we're continuing that spree up. So we're pushing the overnight high even through. So this, I'm sure, is shocking those who are short. The market was, of course, incredibly short in December, and it really showed. It tipped its hand on the first trading day of the year on January 2nd or 3rd, where we popped really strong. There was a 100 and some point day on very, very high volume. And since then, it's been just crawling along. We're about 200 points higher from where we were back then. But the overnight session shows a two-prong profile. It shows that it balanced out pretty good, at for the session under that 25 was broken, became support, consolidated, and then we have a continuation, a very classic pattern. Something I want to show you just to share a little bit of what I do. So I do these stock zones, which are available to Convergent members. I do these stock zones that determine where the market is most likely to take a turn, and I do these on a daily basis using intraday charts of um, various durations. But I also like to look at a 60-minute on an all-session basis and to look at where we are and what we've done. And as you can see, there's quite a bit going on here. The most important of which I want to point out is this. That point of control, pretty wild, right? Right at the high, next point of control, right at the high, next point of control, right at the high. And this zone here at the 26 becomes really important. Not only is it a century figure, but we traded quite a bit right up against that high. And that makes sense because people who have call options, short call options, may be hedging with futures or whatever. There's some delta hedging or something going on there. But you can see that it's very clear that we push up, push up, push up, try again, and then pull back, push up, make a better run at it, and we finally break through and we pull right back to it. Chop, 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 pull right back to it again. Okay, yesterday overnight, 2596 area is really important. This entire thick zone, it's about 4 points thick, and then we're running away. So be sure to step away. My point is be sure to step away and look at what we've done in a bigger picture. And I'm incorporating the overnight, which I normally don't, because there's quite a bit that happens in the overnight. A lot of the discovery that we've been doing has been occurring overnight, and it started last summer. Now let's zoom out a little bit and look at what's below us. Look at this level here. We could see that we started to sell off, chop, chop, and then we had a big sell day, right? And then we came right back to the 17, 18. We fall off, come right back, go back to 19, 21, 21, 20 half, pull back, break through, push, pull back to 23, and then oh. So this area here you can see is very clearly acting as support. This is actually this is becoming the 62%, 61.8% pullback on this rally. But pay attention to these things. This is part of where my stock zones come from, and I expect some participation in these areas on the first test. And as you go back in time, it's best to start at the last swing. So find the last swing high, and then go forward from there and walk the day. Just walk the day, kind of like this, and see what the market has done and try to read the narrative. Where's the volume? Where's the profile pointing? What did it do in terms of price action? You could see the high that we put in here was tested later before it failed, and so on and so forth. You could see 29.12 is becoming key, and so on. So just make sure you take the time at least once a week to view the market in a lens, a more panoramic view of what's going on. Enough of that. I need to end the broadcast here. Let's move on to what we're looking for today. I will take a moment again to bluntly remind you to hit the like button today. It does help me out. It is Like Friday, so hit that button. What are we looking for today? For today, the market is becoming quite extended in terms of the auction. We have run without properly retesting the areas below, but of course we have to trade what we see rather than what we think. We're opening up. Um, we are opening up right against yesterday's high, quite a bullish trend. My expectation is uh, an open that's an open auction. I'm looking for inventory to balance out a little bit as usual. Remember, trend days tend to happen a lot less than balance days in this product historically. So I'm looking for a push, but pay attention to a test of this 45 area below. If it does break through, now there's nothing here that tells me that buyers are not aggressive still. So if we do dip down, I expect it to be bought back up, and I'm looking for it to continue to push. And 2670 becomes the next key area to test on scenario one. Yeah, I don't know why it's choppy. I'm not sure why the fiber connection is messed up today. Um, So that's what I'm looking at. If it does fall through, this scenario two, if it does fall through 4550, this very quick push down into 2635, and then I'm looking for 2626 as an area of initial support for scenario two. Okay, we're opening out of range. To the upside, there's a higher probability of an open test drive. The open test drive, the most likely open test drive with the trend, although we're going into a holiday weekend, the most likely scenario is an open reversion back test and then drive the other way. Again, I expect that the target would be around 70, 2666 is likely to be next. I'll leave you with that. For some reason, the connection is not very good. I'll leave you with that. Good luck today. Remember, it's Friday. Make sure you're patient. Don't go into the holiday weekend with a hole in your pocket by taking excessive losses. Good luck today, and I'll catch you tomorrow. Take care. Or I'll catch you Tuesday. Take care.